Now, like we were talking about like a lot of users and like they have different needs and how do we serve that? So before we come to financial accounting or management accounting, let's go through a different section, which is the users of financial statements, right? And then we will be coming back to these two slides and then we will move to the next topic. So each business, uh, if we talk about whether it is a proprietorship or as complex as a company or a trust, each organization has more or less each one of these users to their financial statement. But if it is a private company, it might be possible that not all of them are interested into that. But yes, everybody because is working in not in a completely isolation, rather they are interacting with each other, and in a way that each one is using information of other and like making some sense out of it. So like we have talked about it. So main users will be from like the number one will be your management, which will be the number one in like then the another internal user will be your employees. Then from the external point of view, the public at large is the biggest one. They are there because it is like a part of your corporate social responsibility, and also because you are taking resources from the like society itself, like whether it is human resources or material or other kind of resources, you are taking from public only. So public is also interested into how company is performing, how they are like using the resources. The competitors, they are using to see where they stand in terms of like business. Government is also another user. Lenders, suppliers, customers, and investor, they are another external parties who are interested into our well-being or the financial reports that we prepare. Each one of this we have discussed about that. Now we have some description about each one of them, what they are and why they are interested into this. Now, number one here it is the investor. What do you guys think that why an investor will be interested into your financial statement? Okay. So here actually as an investor, you are putting your money, right? And you would always make sure that hey, your money is always increased or your wealth is like maximized. Like we cannot say it is like double, triple, or like quadruple or something. But like the main thing is you would want your money will be growing with the company. Now, investor is someone who will be investing into different forms of like in different forms. It may be a loan, it may be equity, it may be on another form of promissory note or something like that. Each type of investment has its own advantage, its own type of risk. Equity is the riskiest one. So if someone is ready to take higher risk, it means they will be expecting higher return also. So as an investor, you would be interested into knowing whether a company will be able to provide that or not. If someone of you is thinking of starting a business, a startup, so because it is a new kind of business, the possibility that, hey, whether it will survive or whether it will succeed or not is something which is unknown. It is uncertain. So how would you make sure that money that you are putting into someone's business, and if it is not going to work, then you are gonna lose your money. You will not get anything out of it. So you wouldn't be ready to put into that. So an investor would be interested from that point, like how much money I will be getting back, or at the minimum, whether I will be able to get my principal back or not. So like there can be two type of people. Number one is investors. Number are the people who have already invested into your business. Then there are potential investors who are the people who are willing to invest into your business, but they have not invested so far. But they are interested based on the things that they are looking into. If they are satisfied, then they will be investing into your business. So investor and potential investor are interested into their potential profit and security of the investment. So there are twofold things. Number one, the return on the investment, and second is the principal amount that they have invested. Now, the future profit may be estimated from the target entity's past performance. So they will be looking at the financial statement to understand what is the track record of the company, what is their past performance. Then they will see. For example, a company which is growing at 20% flat each year will be a very good company to like invest into. Or for example, in another company where in 1 year they are earning 40% in relation to last year, in the next year they are going minus 20% or 30%. Next year, another they are getting a hike of 60% increase. A company which is having a roller coaster kind of track record, maybe it will be not something which will be very favorable to you. So how would you invest your money into that, or whether you will have that much confidence into that, or when you have multiple options, which one would you be selected? So all those things an investor will be having in his mind, and based on the data that they have in front of them, they will be making a call. The security of the investment will be revealed by the financial strength and solvency of the entity. Now, here, when we talk about solvency or the financial strength, the two of the financial statement, number one being the balance sheet. The balance sheet will show what are the resources that is controlled by the entity. It means if company has enough assets or raw material or other resources, then they can produce things. So this shows that, hey, company has enough resources to do something. The solvency is another thing where it comes into whether the company will be able to repay or not. So solvency will be something which will be considered based on your profit and loss account, number one, and the cash flow statement. So these are the two things where they will be looking into and see how they can, like how certain, what are the possibilities that they can get back their returns that they are expecting and their money that they have invested. The largest and most sophisticated group of investors are the institutional investors, such as pension funds and unit trusts. Now, this is another career opportunities, if you ask me. Now, everybody, like I mean, in India, if you see the number of taxpayer, what do you think are the number of people who pays tax in India? There is a increase in the number of people who are investing into the market, but still, because like let's say like I mean, out of 5 people, like you 4 people, only 1 person said or 2% said that hey, they wanna start a business, or not a perfectly business, a profession. So when a person is working under someone else, they must be devoting their time with like for that person. For example, if you're working, you might not be able to devote your time to something else. Investing into a share market or like other commodity market requires a lot of research, and also you have to track your portfolio on a constant basis, and that is not possible thing when you are working for someone else. And this is where the institutional investors comes into the picture. So whether you like call it a mutual fund or unit trust or things like that, they are the institution where people can put in their small amount of money or large chunk also, and there will be a one person who is capable of and is professionally, I would say professionally capable of managing the funds. So they will invest into different companies, and they will be getting the return, and that return is then spread over whatever units you are holding based on that. So they are one of the big investors. They are ready to take great risk, but they are also expecting a higher return. So in a startup, you will see banks or the traditional investors like um, the Baniyas and all those, they are not interested into investing into your business. Reason being, there is a great amount of risk which is there. So, but these institutional investors are ready to invest into that. But for sure, they would need that, hey, your financial statement are correct. Might be when you are starting, you don't have, but what are your projected financial statement that they will be looking at. After investors, employees are another key users to your financial statement. So financial statement, now it is not just the employee. I mean, like right now, if you see, this is a very sad point actually, I would say. In companies, there is a department called human resources. This is a sad reality which I think you guys will be facing near soon, like in the near future. There is a department which is called a human resources department. Ideally, I believe that that department should be there to take care of employees, but no, they are not completely taking care of you. I mean, to some extent, yes, in like up to the extent that they are legally bound, but beyond that, they don't care actually. So this is where the trade unions comes into the picture, who will like take part into management's meetings, and like in front of them they will put your demands, and based on that they will negotiate. So a company where which is not doing really well, no one would like to work. But a company which is earning profits, there is a great chance that you will be getting a like high amount of bonus from them. So employees from that point which are also interested into your financial statement. Another example could be when you are starting a job, you would want to be sure that hey, whether or not this company will survive after 1 year. If not, then you have to again like go through the again pain of finding another job and go through that. So from that point also the employees are interested into financial statement. One thing here I would say is once you complete your ACCA, before 5 6 months when you are about to complete, or even now also you can go through this thing. List 5 companies in each industry where you want to work. Look into their things, like what are they doing, how much profit they are making, what are the challenges that they are facing. Right now, the market is the one where one who provides solution to problem that they are facing will be the one who will be getting paid more. So list every company in which you are interested. At least 5 companies in each industry in a say, order of priority, and you say, hey, this is the company where I want to work in that year, and this is the target which I am having in mind. Always set that thing, and you will have a more clear view, or I would say goal to achieve. And that is very important because I think that will define you or like help you decide what are the key areas where you should be working, or what are the core skill that you need to develop in yourself so that you reach to that level. Make a list of this thing. We can discuss about that if you want. So employees and the trade unions representatives need to know if an employer can offer a secure employment. It means they will be there after some time or for the near future, and possible pay rises. It means they will be able to pay you more, or at least to cover you for the inflation that is there. They will also have a keen interest in the salaries or the other benefits that are enjoyed by the senior management. Sometimes you will see this is a very I wouldn't say sad part, but this is a very significant thing is um, what do you think Tim Cook, who is the present CEO of Apple, got as a compensation in the first year when he was elected as a CEO of Apple? How much money he might have got in the first year? What do you think? Make a guess. There are 102 countries around the globe who has less cash than Apple has with them. Apple is the one company who has like maximum amount in their liquid funds. I mean, they try to keep cash with them. I mean, this is a very like if you will be going through into financial management, you will see that the treasury manager or CFO's function is to manage funds very effectively. And one of the main thing is to invest funds somewhere. But Apple try to keep the money with them. If you see the inflation, the money that you have today will not be as valued as they are today. But Apple, even then, they have it that much. Apple gave him around 15,000 crore, like 15,000, yeah, I think 15,000 K dollar worth of stock and other things that he got. Like for another employee who is working at Apple, on an average, this year they gave a hike of 2% on an average. 2 to 6% was the number, right? So if you look at the numbers in comparison to a top management guy versus a junior guy who had just started with the company like that. And this is the case where a company is transparent, very transparent in terms of what they pay. There are companies who don't follow rules. Really, I mean, they are like, they really suck at it. But this is the case. So the trade unions and employees are interested into, or the even the shareholders are also interested into how much we have to pay to the CEO or the other top level like peoples. So they have an interest into, and this is something that where they will find it. They will find it into the financial statement. Now, information about divisional profitability will also be useful if a part of business is threatened with closure, right? Now, this is also in another case where companies might like kick you out just because saying that, hey, they don't have the resources to pay you salaries or something like that. One question here. This is I think I would say, please take a note of this. I would ask you to research about it and then come back on it. So, in financial statement, what are the regulation which require that, hey, if they are getting more than a certain percentage of company's income as salary, which is to be disclosed in the financial statement, other than profit and loss account, where we show it as a salary and other expenses, where we would be showing it. Do you understand the question?
Can you please state it again? I mean,
Yeah. In financial statement or in any other report, where we would be showing the amount of like, I mean, I would say the salaries or the loans that we have paid to top management or people who are interested into like companies.
in the salary we have paid to our employees,
No, not the employees, but the top management.
only the top management,
Yeah.
executives.
Yeah. So is there any disclosure or is there any financial report that we have to, right? Now, but this is very important because you should understand that, hey, these are the things that you should be, why they are interested in this. So, what are the things that they will be specifically checking? You should be knowing, right? In India, there is a like specific rule also. There is a section of Companies Act which deals with this. We will come to that point. But now, and another users to your financial statement is your lender, who is people who has invested in your business or given you a loan. So lenders need to know if they will be repaid. This will depend on the solvency. Again, you will be getting the information from your profit and loss account and your cash flow statement of the entity, which would be revealed by the statement of financial position. So the solvency is another thing, which is the, when we say the statement of financial position, we are talking about, yeah. So the statement of financial position is balance sheet. Okay. So the long-term loans may also be backed by security by the business over specific assets. So in case the business is not able to repay them, they will have control over it. And there are different accounting things that we will discuss also. The value of these assets will be indicated in the statement of financial position. In relation to these assets which are earmarked, if you are taking in a loan or in relation to this, there is a disclosure requirement as per IAS 10, which deals with the property, plant, and equipment, right? Then there are government agencies. Now, government is providing you the infrastructure, so they are incurring expenses on you. But government is always there to take money from you. It is a bad thing, but yes, there are like different other countries where the government charges very less amount or almost no tax on your income. I mean, there are countries where the government's main source of income is something else. Maybe tourism is like for few countries like Indonesia, Thailand, and those kind of countries. So government don't use like tax on you or is a very nominal amount that is there. But government is also looking into your financial statement, not just to tax you, but also to help you. Sometimes you will see government provide you some subsidies, or sometimes they gives you some tax incentives. So to understand that also, government is interested into your financial statement to see whether you qualify for some things or not, or whether you have complied with the terms and conditions of a particular subsidy or a grant that government has given you, right? For example, a backward area where there is no employment or something, government might ask a businessman to start a business in that area. It will be a lot of capital outlay for that businessman. So he might ask for some assistance from government, and government might also in exchange may ask for some other like things. So those things will be conveyed to the government that hey, this company is eligible for these things or not, or what are the amount of taxes, or another point of view will be to see, for example, your income tax authorities. If you have like gone through the income tax act of India, you will see there are like multiple expenses which are not given as a credit when you are filing your return, right? So this is the act which deals with the like how you will be taxed in relation to your income. So there are some expenses which are given as a expenses credit. It means they will be reduced from your like profit, but there are some which are not given. Basically, that means your profit will be increased by that much amount, and you have to pay extra taxes. So from that point, also government agencies will be looking into you. Then there are compliance related issues that will be other government bodies. So they are the users. Now the suppliers, they are also interested into your financial statement, thinking whether you will pay them or not. New suppliers may also require reassurance about the financial health of a business before agreeing to supply goods. This is not very much relevant, but this is relevant when you are starting your business and you are taking goods on credit. So when you are starting, you don't have a name in the market or you don't have a background or a history. So they might be interested into your financial statement or some other kind of securities. But once you are in a business for like let's say 2 3 years, this will not be a very much. But even then, suppliers might be interested from the point. Think of a scenario where there are very limited number of supplier of a particular commodity in a particular area or a particular geography, you can say. Now, each one of them might be interested into your financial statement, seeing like how do you manage your that resources, how much money you are making out of it. Is there any chances that they can increase the pricing, or is there a chances that you can negotiate with the suppliers? I mean, let's say there is one supplier who supplies something, and then there are clients, so they might be in a position where they can negotiate that hey, we will be buying this much worth of money, how much discount you can offer, instead of going as a like individual business and dealing with this. So these are the things which will be there. So this is more from a point of a customer. So customer need to know an entity can continue to supply them into the future. This is one of the main things. Sometimes you will see, like especially this is something which I have seen in relation to IT companies. Right now, TCS, Infosys, Wipro are the big names. What is the big challenge for new companies when they are coming into the IT industry is um, nobody trusts them from the point, number one, they don't have a history, and number two, whether they will be there in the near future. Let's say you are one who like is very interested into the product which is created by a new IT company, but you see after you have purchased, after like once you have purchased, after 1 month, that company is now nowhere to be found. Now you cannot claim your warranty and other services, or you cannot get other like parts of that service, or you cannot get support in relation to that. So this is another problem why people don't trust new companies. So from this point, customers are interested into the company's financial statement. So a company which is having a very solid foundation, which has a lot of assets with it, which is having good cash flows, which is earning well, you can say that it will continue in the near future. But if company is making losses, you can say it may shut down anytime, right? Now, the public is another user which will be thinking from different point. So all those things. So you can say how the business is impacting the society or the economy or the environment or the local communities. It means everybody is impacted. So if a business is generating employment, that will automatically like um, help you with your living standards, your education, and other opportunities also. So all those things people will be interested by looking into the companies, or whether they will also be interested from the point whether the business that is there is causing any environmental damage to the environment or not. So from that point, the public is interested into the financial statement of the company.